What's going on, guys? Hope you're having an absolutely fantastic day. So today I want to talk about whether the stock market has bottomed, right? So recently, there has been like a 24% rally from the June lows, and a lot of people are calling for a bottom, saying that a new bull market has started, right? But if you look at the outlook, right? So Nasdaq, a bull market, because it's up 20% off its low. Who makes this stuff up? After 2000, the Nasdaq did that 7 times before it fell 78% to its 2002 low, right? So this is basically from Michael Burry. So obviously you need to take a look at who the advice or who the statement is coming from before making your ultimate decision, right? Because some people tend to be more on the bearish side and some people tend to be more on the bullish side, right? And we want to be as objective as possible, right? But what Michael Burry is saying is true. So you can see that this is the Nasdaq top, and as it came down, there was a bounce, 22%. There was a bounce, 41%. Bounce, I can't see this pink one. So it went lower, bounce another 28%, and so on, right? So you can see that the lower the bear market goes, the more vicious the bear rallies are, right? Because everyone is like hoping it's the bottom, and when it starts moving, everyone is like, this is the bottom, this is the bottom. So they'll buy in, right? But you can see if you bought the bottom around the bottom of those lows, right, you wouldn't have been hurt too badly, right? Because you get this rally, sure, you continue dropping, but you can see that overall the levels are still very, very low, right? So let's say if you bought at this bottom, at this bottom, at this bottom, so your average price will probably be around 1007 or 1006, right? So it wouldn't be too bad, right? Or maybe even like 1008, right? So that is the thing I want to look at today, right? So I have it drew out in my own chart as well. So we can see that the Nasdaq was down 34% in 242 days, right? I think that's quite important to note that it's only for 242 days. And this was by far one of the biggest bubbles we've seen, right, in 2020 and 2021. So a lot of people will say like, oh, the Nasdaq was the biggest bubble in the 2000s. And that may be true, but I think we are at least in the second biggest bubble, or maybe dare I say even the biggest bubble, because you can see that a lot of stocks are down 90% from their all-time highs, those speculative stocks, and then there's this meme stock investing. So I think even in the 2000s, nobody would have fathomed that there will be a zero revenue company known as Rivian at like a $200 billion market cap. And when there's a recent IPO called Migo or what, HKD, the stock taker, it will be up like HKD was up 240-fold in 3 weeks, right? So think of the scale of the bubble, right? And the thing is with this bubble is like it's still ongoing, right? Because these two things just happened in the past 2 weeks, right? The Migo and the HKD bubble specifically. So Migo only went up, I think it was a 50x. Yeah, I say only, right? But yeah, 50x within like 1 or 2 days, right? Basically, it IPO'd and it 20x just in 1 day, or I think it like 40x just in 1 day. But you can only see the 20x because the IPO price that they said was $4, and it only opened at like $8 or something like that, right? So this only happened 2 weeks ago. So this leads me to believe we're not actually at the ultimate bottom, right? But you will do quite well if you can pick these bottoms as well, right? Because if you can pick these bottoms, when there's a rally, you can sell off some, and basically you can maybe get your break-even prices lower, right? When it goes even lower. Because you have to see that a lot of us will feel a lot of FOMO as well, right? Because when this rally comes, you're like, oh my god, is this the bottom of the market? So even though you can see that this tends to happen in a bear market rally, but it's still very hard for us to fathom that, because we can't predict the future. This is easy to see because you see it in hindsight. But if you want to predict the future and you see this 24% up in basically 3 months, right, you'll be like, oh my god, did I miss it? Did I miss the bottom? And things like that, right? So yeah, that's just a few things that I'm thinking of right now, right? Because as we're going through it, it feels more and more real and more hard to think about, right? Because of course, if you can pick all these bottoms, as I said, not exactly the bottom, but of course you cannot pick the ultimate low. It's really hard to pick the ultimate low, right? But if you can pick these bottoms and your buy-in price is at 1,500, I'm sure you'll do fine, right? rather than your buying price is at, let's say, 3,000, then I think you're taking a very long time to recover your capital. So another thing I want to talk about is the interest rates, right? In the year 2000 and the interest rates now, right? And this what leads me to say that potentially this is a bigger bubble than 2002, right? But I wouldn't bet the farm on it, right? Because you can't bet based on once in a lifetime event happening and things like that, right? You have to base it on the statistically probable scenarios, right? But of course, there are a lot of things to factor in as well. So in the 2000s, look at the interest rates at 6%. So you can see that this is around 2003, 2002, where the market bottomed, right? And you can see it coincides with the Fed slashing interest rates, and this is where the housing bubble built up, and this is the housing bubble collapse, right? So we can see throughout that, we have basically formed the biggest bubble in the history, right? So basically the 2020 to 2021 period, what's the blow off top part of the bubble, right? And this, the question is, are these quick hikes going to bring down the market fast, right? Because you can see that the time of the markets down is only like 242 days, and historically that's actually quite short for a bubble of this magnitude, right? So another thing I want to look at is also inflation. So 2002 to 2003 inflation, you can see it's very stable inflation, right? 2.7%, 3.2%. Just take a look at the highlighted blue amounts. Pause and take a look if you want to. And then we go to 2022, right, where it's like highly unstable, right? So you can see that it's 5% from the mid of 2021, and now we have 8.5%, right? So you can clearly see that the Fed needs to fight inflation right now, where else in the 2000s they did not need to fight inflation, right? They could fight inflation if they want to, and they can leave it if they don't want to, right? And the reason that the Fed pivoted, right, mostly is because this inflation was undershooting their target, right? Because the Fed has a 2 to 3% interest rate target at the time, I believe, and this is 1.1%, and they were unable to get it up, right? So basically, if inflation is low, right, the Fed can have 0% interest rates without any worries, right? And that is actually the miracle of 2008 to 2019, right? Basically, miraculously, we had 0% interest rates and also very low inflation, right? That is like the magic formula for building an economy up, right? So if you do enjoy me digging through all this data, giving you my opinions, do help me smash up the like button, hit subscribe, and also hit the notification bell, right? It really helps out the channel. So next thing I really want to talk about is value investing, right? So a lot of people know Warren Buffett for this, right? But of course, a lot of market investors will say that, you know, you don't take the macro and make investment decisions of it. And that is, I think, incredibly true, right? Because you don't want to like, oh, the Nasdaq is up 24%, so I think it's going higher, so I'll buy this stock, right? Because individual stocks have individual stories. So focus on the individual story, but also realize what part of the cycle you're in, right? Because this is something like, I think the big picture, at least you have to realize where you're at, right? Because this is something that I got from Howard Marks, Mastering the Market Cycle, right? So you need to know when to be defensive and when to be aggressive, right? Because if we know that this may be a bear market rally, or this may be a real rally, we don't know that yet, right? But even if this is a bear market rally, let's say we're somewhere at the top here, I don't want to be buying here. Even though this is not the ultimate bottom, I want to be buying here. And I want to be buying here, even though it's not the ultimate bottom, right? A lot of people will cherry pick and say, oh, I only want to be buying here, right? Because it's the ultimate low, right? But truth is, you won't be able to pick the ultimate lows, but you might be able to pick these lows because you get like few opportunities, right? For example, just in this bear market, right? And see that you get to pick this low, right? This low here where the market rallied another 17%, right? And basically it continued collapsing, right? But if your buy-in price is at, let's say, 13,000, look, you are currently at break even, right? So if your buy-in price again is at, let's say, 11,500, now your buy-in price is closer to 12,000, maybe, what is it again? 13,000, 11,005, right? So closer to 12,000, right? So you can see that if you average like that, and let's say it continues going lower, so now it's at 10,000, and you're buying at 10,000, and then it goes here, even lower. We can't predict all this, right? But if you can buy at near the market lows for one phase of the bear market, right, then I think you'll do really well, right? Because even in this bear market, right, you can see that maybe a stock like CoinStock, which has an individual story following Bitcoin and all that, it's up 56%. This is obviously not asking you to buy, right? I'm just using this as examples, right? And you can see like stocks like Desktop Metal is up like 137%, right? So you have to think that individual stocks are still separated from the market, right? It's not just one-to-one performance with the market, right? If not, there's no point picking individual stocks in the first place, right? So that is my 2 cents, right? I want to know which part of the cycle I'm in so I can act accordingly, right? It doesn't mean that I'm not buying now, because I am buying, but I'm just less aggressive, right? Because I feel like after this rally, I feel like we're in a bear market rally personally. So after this rally, I want to buy when it's low, right? So when it's getting lower here, I think in my opinion, this is not the bottom, right? A lot of people are too excited from the bottom, right? Especially maybe some of the newer people, right? They think that just because there's a rally means we're already at the bottom. Okay, time to go all in. And they never focus on position sizing, right? So I'm still buying because I don't know when the bottom is. I'm buying at a less aggressive clip, right? So if I see that's another like red candle, general rule that I have, right, is actually a very weird rule, is that I only buy on red days, right? So that also helps a bit when it comes to moving your cost average down, right? Obviously, it's not good in a bull market, right? Because all the stocks are running higher, let's say every day 5% or 1%, 2%, and then you're like, oh, there's no down day, so I don't buy, right? So obviously that is a bad strategy in a bull market, right? But we have to know that we're in a bear market. This might be a bear market rally, and if it is, I don't want to be deploying too much capital here, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead, and peace out.